Hello, everyone. Welcome to the stock specific class here for Thursday, October the 13th. If you have any questions during the week or any questions I don't get to today in the live class, make sure you send those to jerry@traderspro.com. I'll be happy to answer those for you. Obviously, a really wild day so far. Big reversal. Open lower and then reverse back up. Tuesday, we were talking about how we could go either way in this area. I didn't know we were going to go both ways. And that's what happened is we went both ways. We went down and then up. So we'll talk about the significance of that. I'll start off by saying be very careful not to chase this rally, not to jump in and think, okay, it's over, everything's done. That's the reversal we've been waiting for. I don't know. There's a lot of reasons to be suspicious of it and to think that we still could have further to drop. Now, that doesn't mean we couldn't rally for another day or two. We'll take a look at the charts here in just a second. But we'll start off by going through the directional alerts. And again, we're just trying to see, in this case, is the market overbought, oversold? The problem is that all these indicators update overnight. These aren't going to be factoring in the big volatility that we saw today. In other words, a lot of these would have hit pretty oversold right when the market opened, and then obviously backed off of that afterwards. But going into this morning, we looked pretty much the same as we did on Tuesday, meaning that we were oversold, but not extremely oversold. We weren't as far as momentum, we weren't in that extreme reversal risk range. And momentum breadth was, but we weren't all the way to the far right side of that. So there was still some room where we could have dropped. And probably the key indicator of all this is sentiment. Despite the drop down this morning, we're just not seeing fear really kicking up. And in fact, that was one of the reasons why I pretty much knew right at the open that we were going to rally was where we dropped today should have spiked the VIX up higher if this was, especially with the CPI news coming out being as bad as it was. And it didn't. It was going down, and that I'll show you the VIX chart here in just a second. You can see it, and that immediately told me, okay, nobody's going to sell this news. They're buying this, or they're covering. Again, buying in this case, what's happening today is a short covering rally. All these people are very short the market. The market is getting a little bit oversold. They're afraid that it's going to snap back, and so they have to close out those short positions, and to do so, they've got to buy to close them out. And that's what we're seeing right now. What you look for after a day like today is do new buyers come in? Buyers that think the market's going to go up from here, are they coming in? We haven't seen that over the last couple of rallies, although there's been a couple of days where we've seen a couple of day rallies, 2 or 3 day rallies, no follow through to that. And I don't think we're going to see it here. And like I said, I'll present that case here in just a second. So sentiment still hasn't come down far enough. We're still in this complacency range, and we're not going to be at a market bottom until we get out of this complacency range. We've got to see. I'm not saying that the sentiment has to get all the way to the far left side of this fear range. It's been in this complacency range for so long that that would be maybe expecting too much. But there's got to be some fear that's showing up. It's got to get in the fear range, and probably pretty deep in this red bar right here. Maybe not showing extreme, but showing some very high fear that's in the market. We're just not seeing that. And again, until you do, it's just very difficult to believe that we're at a bottom. And again, today, if you're watching news shows or financial websites and people are saying that this is a good time to buy, or look what happened today, this is the time to jump in, or even if it's not that aggressive, but they're saying this is where you want to nibble and start getting small positions in, that is not how a bottom feels like. A bottom feels like get to go to cash, get out, not safe, who knows how far we're going to drop. And I keep bringing that up I know it's repetitive, and I know people are probably sick of me saying it, but I want to make sure that, well, first of all, I get new people coming on all the time. I want to make sure everyone's aware of that, and doesn't fall into that trap. But I want to make sure that you're not going to get wiped out of some of these suckers rallies that are taking place. All right, buy-sell ratios. We've seen them start to come together a little bit here, and then now they were widening back out again with the recent selling, and then now with today's move higher, they'll probably start working the way. Well, we may not see the buys move up as much right now, but we'll see the reason why you don't see a big dramatic move right here in buys is that what's happening is a lot of these stocks were in sells and they're going from sell to hold, and that's causing the sell indicator to drop. Not too many stocks are going from hold to buy, so you're not seeing this move up very strong. That's very normal during a downtrend, a bear market like this, to see that that mostly what you're seeing is stocks going from sell to hold, and back to sell, back to hold. You're not seeing a lot go into the buy range, which is what we've seen when we've looked at individual charts. There's a lot of stocks that there are not very many stocks that have a buy signal right now, and we saw that in the index chart as well. I'll pull that up here in a second. But as far as overbought, oversold, again, with the market rallying today, this is probably going to be coming down. So obviously, if we're not in an oversold condition, if we did have a big sell-off today, it probably would have pushed us closer to that extreme, and we would have gotten to that more extreme oversold state that we were looking at on Tuesday. Again, not so. Basically, at this point, well, let's take a look at the sentiment indicator, and I'll wrap up the direction alerts. We're not oversold on this sentiment indicator. So basically, what all this is telling me is that we can continue to trend for a little bit in whatever direction. We can rally right here. We could drop right here. Nothing's telling us that any major reversal is. We're not in whatever the trend is. We're not stretched on that trend. In this case, we've been going down, so we never really reached that really stretched period on the downward move. Which again, so we're getting a rally that's not taking place in a very oversold market. So that in and of itself can tell you that it could just be a little bit of a bounce. Alleviates a little bit more of the mildly oversold condition, and then we turn back around. What I was talking about earlier with so many stocks that are, so you can see right here, if you take a look at the index. What I did is I clicked on the index tab up here. For those that are new, you don't have to check this all the time. I've been bringing it up a lot lately because it's just been pretty dramatic. But you can see that if you take a look at just the broad Russell 3000, this is basically taking into account most stocks that you would even consider trading without getting into real tiny companies. So you got 1,000 of those 3,000 stocks that are sells. You got 800 of them that are buys, and you have only 161 that are holds, and you got 161 of them that are buys. You're seeing a lot of these stocks go from sell to hold on these rallies, and then when we drop again, they go back from hold to sell. You're not seeing too many stocks reaching the new buys, and that's why this indicator back here, this is why you're not seeing the buys down here go up very much, and you're seeing the big dramatic move in the sells coming down. Now, again, that's still alleviating when it drops like that. It's still alleviating that extreme condition, but that's kind of what's going on. If you're wondering why this green line doesn't move up very much on some of these up days, that's kind of what's going on right now. And that'll change when the trend changes. It'll be the opposite that'll happen, where you'll have. Let's go back to that index chart. You'll have most in a bull market. You'll have most of the stocks, tons of stocks, with buys and holds, and very few with sells. And you'll see a lot of the stocks on pullbacks going from buy to hold, and then when it rallies again, they go back to buys. And you'll see that green line kind of making the more dramatic moves. All right, let's get to our charts. And I do have a goal today. I had it on Tuesday. I didn't meet it to get the class done in an hour. I've been running way too long on my classes, and I know there's a lot of you that would love to sit for 2 hours and talk, but I know that there's a lot of people that they don't want to go past an hour, and I get that. I shouldn't be going past an hour. It just you start to lose people's attention when you go a little bit too long, and it usually is usually it's caused by repeating a lot of stuff too. So I'm trying not to repeat things to drag this out that long. So let's get into our market update though. And on Tuesday we were talking about, you know what, I need to go. I want to start off. I had two versions of Traders Report open because I want to start off with looking at a long-term picture. There were two areas I've been talking about recently of where to look for support. One of them was the 50% retracement, and I don't think this line is completely accurate because we're right at the 50% retracement of this entire move from the COVID low to the recent all-time high. It's right in this 350 area right here. And again, we got down to that level today, and it didn't spike the VIX. It didn't spike the VIX. The VIX was already kind of elevated, but it didn't spike it towards 40. I didn't expect it to get to 40. In fact, on Tuesday, I talked about how I thought it would take a move down to the COVID, the start of the COVID drop right here, around 340-ish, 339, 340 on the SPY. I'm kind of focused on about 340. That could spike the VIX above 40, but I don't even know if that will right now, at least not. I think we're going to bounce right here a little bit. We already have started. Then I think we'll get a move straight down to this level, and that could be where it could spike that VIX above 40 and where we start looking at least start talking about a potential bottom at that point. The way it acted today makes me start to wonder if we're dealing with a support level that's even below all these. That's really getting dramatic. So we'll see. We'll see what happens there. But I want to start off with that chart. Now let's take a look at the near term here. And you can see that dramatic reversal today. We opened. Yeah, see that Fibonacci level, that line wasn't exactly accurate there, or completely accurate. It was close enough, but remember we were 350, 349, 350, and we got to that today at the open. We got that down here, and then we bounced off of that. Now this is what we call a bullish engulfing candle. It's a bullish price action. I mean, it's pretty obvious. I mean, when you open down like that, there's over 1,000 point change in the Dow. The Dow was down. Actually, it's closer to like 1,200 points. Actually, closer to like 1,400. The Dow was down about 700 points at the lows, or 600, 700 points. I can't remember the exact number. And then, you know, we rallied back up, and it got up above it's positive 600. Actually, it's positive 800 points now. So yeah, there's like a 1,400 point reversal. That is huge. That is extreme. Okay. But I want to remind you, I've said this a number of times, that some of the biggest market rallies in history have happened as bear market rallies within bear markets. And so you got to be careful when you know you're in a strong, sustainable uptrend is when you're having smaller up days, but you're having more of them. So, you know, what we've been seeing a lot lately is we get 2 big day rallies and then that's it. It fizzles out. Or here we had 4 big day rallies and then down. When you're when you're in a nice, healthy uptrend, when you bottomed out, you might get a reversal like this because that's always usually caused by that short covering. Those big moves are short covering, and the reason for that is that there's more panic in covering short positions because there's more risk for those people to hold a short position. And so they are scrambling to buy at whatever price to get out because they have unlimited risk when they're short of stock. They could lose far more than what's in their account if they're not careful. And so it causes these sharp rallies. And they always happen when markets bottom. You get these at a market bottom. You do. So I'm not saying this couldn't be a market. There's no way this could be a market bottom. But then what would happen after that, after a couple of days of short covering, is you'd start to get these smaller up days, but you're getting more of, not necessarily every day, but you're getting smaller up days. It's more gradual as it works its way back up. That's why markets always rally slower than they drop. And so when you're seeing that more controlled, slower rally, that's actually more of a bullish sign. When you see these really big rips, that's actually kind of bearish. You've got to be very careful not to get sucked into that. And people do because it's so emotional. It's like, I'm missing out. I mean, how many of you are looking at today saying, oh, man, I got to get in. I got to get in. I'm missing it. That's not a good emotion to have right here because it's probably causing you to be a little bit overly optimistic. But that is a bullish engulfing pattern. Usually you don't like to see it engulf that big the day before, but yesterday's move was down and today was open lower, moved higher. Remember on Tuesday we were talking about, okay, could this be wave A, wave B, wave C? And then we dropped. We get a rally here, or we're going to break this support level and get a big move down. Well, again, we got the big move down and then we're moving up. We got both. And that's what I was talking about at the beginning of class. We got both moves. Now, I think we could still rally a little bit further off of this. However, we've got a couple things coming up. Well, first of all, you had Fed minutes yesterday, PPI yesterday. That was all telling us that nothing is going to change with the Fed. We had a really hot CPI report today saying inflation is not under control. It's gotten worse. I get it that those are lagging indicators, but that's what the Fed is doing, is they're following lagging indicators, which means they are raising in the next Fed meeting, which I believe is the first Wednesday of November. I have to double check that. I keep saying that in the class. I should double check that to make sure I'm not wrong on that. But they are going to probably raise another 75 basis points. December meeting, they're probably going to raise another 75 basis points. This is not going to stop anytime soon, and I can't. It's weird, and a lot of people are trying to wrap their heads around this of how the market is reacting this way. Now, again, sometimes the market can rally or drop without having any sort of good reason at all, or there are a lot of periods where I scratch my head. I can't understand why the market's doing what it's doing today. But it's important to point that out, that things are going to get worse before they get better, and they haven't even started to get worse. That the jobs report last week showed us that it's strong right now. Jobs are strong right now, and the Fed wants it to be weak. They want unemployment to go up, and they're not going to come out and say that because that's not, especially for people that are living paycheck to paycheck. It's going to be some real hurt coming. But that's what they're trying to do. They're trying to slow the economy, and that means slow growth. That means they want unemployment to go up. They want wages to come down. They want you to stop spending, and so that these prices, the inflation of all these other assets, or all these prices around us start to come down a little bit. You know, it's scary to think about how aggressive they are probably still going to be until they get this under control. And it's not going to be fun getting it under control. It never is. I mean, that's why they're usually so obsessed with preventing inflation, is because it's so hard to get under control, and it's very painful to everybody usually to try to get it under control. But I haven't seen anything in the news items that the market's really been focused on. I haven't seen anything that would be deemed bullish. But again, we were a little oversold. We talked about being mildly oversold last Tuesday right here, and that's why we felt like we could get a little bit of a bounce or rally off of that. And the same thing here. We were oversold a little bit, especially at the open. We could get a little bit of a bounce here, but I'd be looking for a possible another bearish reversal candle to signal maybe another move lower. Now, if we can get above this high, this is the previous lower high. So we've got lower high, lower low, lower high, and today put in a lower low. So you go to the previous lower high after you went to a lower low, which is this lower high right here. You get above that, that would be a pretty bullish signal to get above that. Because now you've gone to a higher high. You'd look to see if it pulls back and gives you a higher low. That would maybe make a better argument of a trend reversal right there. Now, it could be that what's happening here, we've talked about we've talked about, let me go to a 2-year chart here. We've talked about this being possibly wave A, wave B, wave C. I would still say if that's A, B, C right there, that the wave C needs to probably be a little bit further down, and that's where I was pointing to that 3. What is it? Where is that? That COVID low or the start of the COVID drop. I remember where that was. 330 was it? I think it was like at 330 down here. Maybe it was up. Maybe it was 340. Anyway, even then, that would still be a pretty short wave C. Now, you do have 5 waves down right here. 1, 2, 3, 4, 5. So from an Elliott wave standpoint, that particular move could be done. And maybe what's happening is this is just wave 1. This 5 waves is wave 1 of wave C. This is A, B, and this is just the start of wave C. And maybe we rally. If we do rally up a little bit, maybe we rally up. Maybe this is wave 2. And then we get the really big drop in wave 3, and there's a lot. This would be the argument. There's a lot further we could drop out of this. And if that's the case, we could get a pretty decent rally, maybe where it looks like we're going to a higher high, and it looks like we're putting in a higher low. It looks like things are maybe bottomed out, and we're rallying back up, and then it rips down again. That would definitely take care of some of the sentiment, and it would fit within that argument that if people start to look at this as we're done dropping, and they start aggressively buying, that drives this back up. And they say, well, there's a higher high, and then we pull back, and there's a higher low, and it's just that this is actually a bearish ABC pattern, and then it starts dropping. That could create that panic sell-off that I keep bringing up, talking about. And I've been talking about panic sell-off or looking for a panic sell-off. We've been talking about that since the market started to drop at the beginning of the year. So basically, from spring till now, we've been kind of waiting for that, looking for that event. But that's why I don't think it's done right here. It didn't get to 40, barely got to 35. But this was also an area on the VIX where we said, in fact, let's just bring up the VIX chart here because I keep talking about it. We don't have it on the Traders Pro here as you can't trade the VIX. But here's one of the bullish arguments I made on Tuesday that the market could rally is that every time the VIX has gotten up to about 35, it's rallied off of that. The market is rallied. The VIX has dropped. And what I was talking about on Tuesday was one of these times it's not, and I personally felt like if we really clearly broke that June low that everyone was kind of focused on, that would cause the VIX to spike up here. And there's 40. That's just a minimum of panic right there. I think the VIX will go higher than that, but at least to have a minimum because who knows? Maybe we spike to 40, and maybe who knows? Maybe that is the bottom there. But that would at least cause enough panic in the market to at least be able to make an argument of a potential bottom. But the VIX came down today. However, so what I saw in the morning, by the way, when I saw the market was going to open down, Dow was going to open down 700 points. I mainly I thought, boy, is the VIX going to be near 40? I didn't think it would be at 40. I didn't think that was a big enough move to cause panic. But I wanted to see if it was up around 30, 36, 37, somewhere in this range. Here's where we closed yesterday. No, we opened right where we closed, and we were actually dropping a little bit. And I'm thinking, we're down this much, and the VIX is not going up. That doesn't make any sense. Remember, whenever the market and the VIX should move in the opposite direction. And when they're not, you want to pay attention because it could mean something significant. In this case, it was telling me there's no fear. There's no fear of the selling. That means we're probably going to rally off of it. And sure enough, we rallied off it. However, with as big of a move, we have this 1,500 point reversal in the Dow. I thought the VIX would be down below 30 then. I thought we'd at least get this kind of a big candle back down, and we're not. The VIX is not below 30, and it's coming off the lows of the day. Now, I'll be really interested to see how we close. That's going to be because that could tell us a lot. So what are you looking for at the close then? Well, if we're going to have another day of a rally, you're going to want to see us close near the highs of the day. This is probably good enough. You have a little bit of a tail up there, but you don't want to see it fade off the highs. If we fade down into here, or especially we fade down into yesterday's high like that, that'll be pretty bearish. And I'm not saying we still couldn't try to open tomorrow, open higher tomorrow, or couldn't still rally tomorrow, but that would be a pretty strong indicator to me not to trust the rally, because it should close higher. Because remember, amateurs tend to open the market, professionals tend to close the market. Well, if we're coming off the highs of the day going into the close, who's closing that? Is it the amateurs who we assume don't know what they're doing? No, it's the professionals that we assume know what they're doing. And why aren't they buying into the close? Because they don't trust the rally. And so that's what I'd be looking for there as far as price action going into the close. Now, I think what's interesting is we've been focusing here on the SPY chart. The Dow, it just reached that previous low and then rallied off a bit. So it's possible this could be wave A, wave B, wave C. In this case, though, it probably wouldn't rally much higher and then continues the downward move. The Russell 2000 looks the same way. So the two that did go lower were the S&P 500 and the Nasdaq 100. And this is what I was talking about on Tuesdays, where I came to the conclusion we're a coin flip, right? The Dow and the Russell look like we could rally right here, but the Nasdaq and the S&P 500 have already dropped lower. They're looking like we could go lower. It was not helping us too much. And I would argue that we're still in a treacherous market, because the conclusion I'm going to probably come to at the end of all this is, yeah, we might be able to rally a little bit further, but we probably are still going to move down. We're still in a coin flip area for the most part. Um, and again, that's not a great place to be. So yeah, here's the Nasdaq 100 chart. You can see it's moved down. It moved down. It looks very similar to the S&P chart. And again, what could just happen here is that we don't necessarily, these rallies don't necessarily have to create an ABC. In fact, usually within strong downtrends, you don't get the A, B, and C. It's a sharp rally and then drop again. And that's what we saw right here, just sharp rally and then drop. Right here, sharp rally and drop. There wasn't really an ABC in there. I think the same thing could happen here where we have another up day. But even then, look where we're at right now. There's resistance in this area right here. That's why it'll be interesting to see how we close, because we fade off of that into the close, and it didn't get above this resistance area. I think that's pretty significant to pay attention to. And again, this is a side note too. It used to be that bullish and bearish engulfing patterns were one of the most reliable handles to trade. Man, back in the early days of my trading, before too many people knew about candles, it was like easy money. You saw a reversal, and then reversals like that don't happen very often. When they did, it was like easy money. You're going to go up off of this. You're going to go down off a bearish engulfing pattern. But I have found over the last, particularly 2 or 3 years, they've actually become very unreliable. I shouldn't say that. They just haven't worked as well. I've had a lot of bearish engulfing patterns that failed. The market rallied right back up after it. I've had a lot of bullish engulfing patterns that failed, where the market dropped right after it. And I don't know why. I don't know if it's because so many more people are learning about candlesticks, and so the patterns, change a little bit, or the formations change a little bit. The market's not going to let everyone profit easily. And so if there's some pattern that works really well, and if enough people learn about it, it's eventually not going to work as well, or it's going to just change a little bit, and to where it's not going to be as effective, because the market's not going to allow you the whole majority of the trading crowd to make easy money. And it's one of the sad realities of markets. Market will tend to hurt the most people as possible, is what we always say. All right. So I just thought I'd throw that in there. It doesn't mean that it can't still rally off of this. It's just, like I said, I'm not as excited about a bullish engulfing pattern as I used to be 20 years ago. All right. Let's get to the rest of the list here. I want to get to some stocks today, because if we do rally, there's some that have some really nice patterns here that I want to get into. The Russell here, I was showing you, this was very similar to the Dow chart. It came back down to these lows. This could be wave A, wave B, wave C. And we could rally up a little bit further off of that. There's a lot of support resistance right in here. So that might be the target area, about 175 or so, maybe a target spot. Start looking for some sort of reversal, bearish reversal, or running out of steam. Bonds are interesting. With the CPI report, the bond yield spiked and then reversed. But I think what's more interesting that I found with bonds, you see we have a bullish reversal candle today. We opened down here, which would make sense with yields spiking up at the open. But we're trading right here, so that we opened lower, we're trading higher than where we opened. That's a bullish reversal candle. But what I saw earlier this week on Tuesday, late Tuesday, and a lot yesterday, I have a friend that follows the bond market and follows bond related stuff pretty well. That's kind of his specialty. And he texted me and said, Jerry, there's a lot of unusual volume going into not the TLT. TLT is typically how you would trade bonds if you're trading on the stock market. Obviously, you can just buy and sell bonds itself. You can you'd be a bond trader. But if you're trying to trade the movement of bonds through the stock market, most people use the TLT or the TVT if you want to do the inverse of that. And he said, I can't remember what the ETFs were, but there's these really small kind of bond ETFs that are not heavily traded. So they're very illiquid. You wouldn't want to trade them, okay? But he said there's huge volume going into these things. And so we were talking and we're like, okay, well, what does that mean? Is that buying volume? Were they buying bonds or getting ready to buy bonds? And they're getting ahead of it. They're getting their position set before the bonds move, or are they selling? Well, TLT is already getting into an oversold area right here. So in my mind, I'm thinking, why would you be? I mean, we're talking huge volumes. Let's see if the volumes are showing up in the TLT as well. Oh man, what's the name of I'm trying to remember the name of that bond ETF. Shoot. Let's see. Let's put the volume here on the TLT. Let's see. Well, you can see some huge. Look at this. This was Tuesday. This is the last couple of days. Now, this is not as big as what we're seeing in the bond ETFs. So, what I'm thinking is, okay, why would you be betting that huge right here, shorting bonds? You've already had this huge decline. And I'm not saying that bond yields can't go higher and spike higher, and they can, and maybe that's what's going to happen. But if I were to make an argument as to what was going on there, what that trader was doing, that argument would be that they're buying bonds or they're getting ready for a rally in bonds. Now, again, be careful here. I'm not suggesting we're trend traders in this platform that we're trying to use here. The trend is clearly down. We're not trying to pick bottoms necessarily. But the way I decide to trade it is to buy some call options on the TLT as a kind of a proxy. I'm not risking very much. If it rallies, great. If it doesn't, but I thought that was interesting. I thought I'd just bring it up. And actually yesterday I think I saw in CNBC that someone was talking about there was like $1 million option trade on I think it was the TLT call option trade. So they were betting it going up through the options market. It wasn't me because I didn't take that big of a position. But and I took my position after that news came out. But anyway, that's something we're going to look for. Let's look for this and see if it leads to some sort of a bounce. Again, I'm not suggesting that it's going to lead to a huge move. Over the summer, though, we did get a decent little rally in the bond market before heading lower. Could it be that we rally up a little bit off of that and then drop? I don't know. But you got a bullish reversal candle. You have all that volume coming in. I just thought I'd just kind of point that out as a interesting event. All right. But as far as the trend, though, the trend is clearly down, and what we're just assuming here is that any rally is just a rally within the downtrend. And that's all I'm trying to do with my call option trades, just get a couple dollar move, and then I'm fine. I can get out. And if it's more than that, great. But I'm just looking for a little bit of a bounce. And those are riskier trades. Try to trade bounces within the downtrend are not, they don't often turn out very well, which is why my risk was very low on that. But I thought I'd bring it up. Gold, we were talking on Tuesday about gold. Maybe if we could find a low right here, it would be a higher low, and maybe We almost got to a higher high right here. Maybe it could be a little bit of a reversal. Well, we got a little bit stronger bullish reversal candle here, which would still be a higher low if it rallies from here. With the dollar looking like it could pull back a little bit, I wouldn't be surprised if gold had a little bit of a rally as well off of this. And maybe all it's doing is, maybe this is just wave A, wave B, wave C, and then it drops again or keeps trending down. But I thought I'd point that out, but it is a bullish reversal candle today that could put in a higher low. You don't want to just go off of just a higher low. You'd like to see it break to a higher high as well to get a little bit of confirmation on that. But in this case, it could just be, if it does break higher, it could just be a bearish ABC pattern setting up for another move down. I don't know, gold's been so erratic. I don't trust the trend, the near term movement of gold. It's been harder to read. Oil continues to look like it wants to go higher. Bullish reversal candle today. Pulled back a little bit the last couple of days. Bullish candle today. We're still kind of waiting for it to get above this level to get to that higher high and get. This was the last correction within this downward move. Had a downward move, correction, downward move. Going to get back above that. I'd feel a lot better about. Well, some of the oil trades, I'd feel a little bit better if the USO could get above there. But some of the individual trades, particularly the ones we're in, the charts look stronger than this and look more bullish than this. So that's what leads me to believe that's where it's headed, is that we're headed for another move higher. We'll see. I mean, if it can rally for a couple more days, then you've got that higher low right there. That'd be a good sign. The dollar, it had a little bit of a bearish reversal, and we were kind of looking at that a little bit on Tuesday because it had that, looked like it was reversing, that came back up again off the lows right there. But today it looks like it's going to close at the lows, and so it brings back into play that this could be wave A, wave B, and then we get wave C. But I still think the dollar should continue to trend upward. But you're seeing a little bit of a weakness there in the dollar, and I think that's what's fueling the rally, and should fuel a rally in commodities. Anything commodity related should rally if the dollar pulls back a little bit further there. We've already kind of looked at the VIX. Let me see if there's anything else I wanted to talk about on the VIX. Well, if you can see a VIX chart, and by the way, I'm not saying you have to go get another charting service. There's a lot of these little free. They have ads on them and stuff. There's these free charting services out there. I'm not going to recommend anyone because I don't have any affiliation with anyone, but if you Google free charting services, I'm sure you'll get a few that you could use. And if you type in VIX, some of them might have a VIX chart you could reference or look at. But if you want to just look at the actual VIX instead of the VIXY. But what I would look for is, if we continue to rally, do we see the VIX get back down below 30? Because so far we're not close to getting below 30. If we get below 30, then maybe there's a chance, and we break out. If we get below 30 and we see the S&P get above this high right here, then like I said, maybe we have a little bit more of a rally ahead of us. Maybe it could last a little bit longer. But again, that's just kind of weird that we had this big reversal and the VIX is not down very much, back off the lows of the day. It'll be, again, really interesting to see how we close today. All right. SMH, big bullish reversal on chips. They were really getting oversold. They were starting to move into this extreme range right here. Transports, again, look like the Dow chart. They didn't get much below that low. They look more like that potential ABC, and then so you're seeing a lot of similarity in these charts. Bitcoin just kind of hovering in that range. High yield corporate bonds had a big bullish reversal candle today. We'll see if that leads to any more of a rally. really that's not telling us anything other. The market's kind of following the same path as the high yield corporate bonds, which it has been for a while now. All right. So again, conclusion after all this is that it's still, again, not trusting. If we bounce right here, we could just be bouncing in reverse again. Now it doesn't mean that we can't just continue to hold our portfolio. Now I did get out of. I'll show you this too. I got out of the SOXS. Now let's go to the portfolio here real quick. I got out of the two hedged ones, obviously, because you're getting a bullish reversal candle. Those could. I'm only using those to hedge, and I actually got out of the SOXS on Wednesday, yesterday, and I'll explain why. Because it had moved up into here, and it was like the far right side of that extreme reversal risk. Now it's come back off of that as we've had this big reversal. Now I went, this morning I was like, man, I wish I would have held that another day. That would have made us a killing on the open up here. But again, if I knew it was going to do that, I would have stayed in it yesterday. But it was stretched. It was really stretched. I knew the market was in an area where it could rally off of that CPI report, possibly. We had talked about that on Tuesday, and so I just didn't want to have that much risk exposure on the inverse ETFs. I kept the SARK till today and got out of it, so it went up a little bit on the open, but I got out the open. I wanted to wait till the class, but when I saw that this morning, I knew the market was probably going to rally. I don't want to just see that profit come back down again, so I got out near the open here. But there's a bearish reversal candle right there. So I do want to be out of both of these because of that bearish reversal candle. We can always get back in. If the market looks like it's going to turn back around, I'll jump back into these. But they helped us quite a bit. Overall, we're up over 135,000. Again, we're not making a lot of money here. We're grinding some profits. It's been back and forth, but that's all we're trying to do while we're waiting for the market to bottom. It's okay that we're not making a killing. More than anything, I want to just show you some ways that if you do want to be an active trader during these downward trends, to how you can do that. Stick with your long positions need to be with stocks that are still trending, that are going against the downtrend in the market and outperforming. And then hedge when the market does look like it's going to pull back. Hedge with those inverse ETFs, where you don't have to be short the market or short the stock at all. All right. Real quickly, let's look at the positions. NOC had a big drop yesterday, but it has a bullish reversal candle today. My stop is down here. I still want to have defense, aerospace defense exposure. So, I really like this company, the way it's been behaving, so I'm going to hold on to that one, obviously. LNG is about getting ready to break out. I want to continue to hold this. No reason to get out of that. I think my stop's all the way down here, so it has some. It's giving it plenty of room to make its move. MPC, remember I said earlier, the USO, I was looking for the USO to break out above some of those levels. Well, a lot of these other stocks have already looking a lot more bullish and breaking out of levels. We broke above this level. We pulled back a little bit. Now we're a nice monster move up today. It looks like it should work its way back up to this previous high, and then we'll see how it behaves at that point, how it acts at that point. Now, if we do get up here a little bit closer, I have my stop down here. What I'll probably do is move my stop up to that low. I don't see a reason to do it yet, but that's probably going to be the plan, to move that up. That's what we're just trailing, or using as a trailing stop, where we're trying to lock in gains along the way. AMD, we had to wait a couple days on this one to take off, but it's a nice move up today. This is off of this move up, this kind of corrective move right here, and then it had this smaller move up, this little corrective move. This gets back to the basics I keep telling you about. Whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. Now, the key part of that little phrase I use is that that phrase doesn't tell you how far it could go. It's broken out above the sideways range, so it could reverse at any time and come right back down. But it usually, when it's in that sideways range, it's going to break. It's going to continue to move. It's likely to break out of the direction of the previous impulsive move, of the previous direction it was moving in. And so far, it did today, and that's enough. It could reverse, although the overall pattern suggests it should at least get back up into here and test that resistance. So I would expect it to at least get up into that area, if not higher. I think this is an area, consumer staples, which are going to be pretty hot for a little while here. All right, so not too many positions. Let's take a look at some individual stocks. I still like oil. And on Tuesday, we were looking at CEIX, Consol Energy, 99 strength rank. I can switch this over to signals here. You can see, but we were moving down right here, so I wanted to have it show me it's coming back up again. Had a nice bullish candle yesterday. It's up again today. I think I'm going to enter into this one. I want to have some coal exposure. I've got, out of my energy stocks, I've got oil refineries, which is MPC. I've got natural gas. LNG is the natural gas play, and then I want to get coal. And this is one I like this pattern. So and it's a pretty well-known coal company, and so I'm going to add this one in. I'll probably put my stop down below here to give it plenty of room. And because if it does come back down below here, I'm probably wrong. Probably wrong on the whole energy trade there. And another thing I'm going to start doing here with these, I'll get into these trades at the end after I go through these individual stocks. But what I'm going to do is, I don't really want to be loading up. I don't expect this rally to really last. But because we've been able to hedge so well with the inverse ones, I want to get into a few other positions. But what I'm going to change here is all these positions I've been staying within about a 7 to 10,000 range of the total capital put into the trade, not the risk, but the total capital in the trade. On these new trades, I'm going to get into 3 new trades today, and I'm going to keep them down around 5,000. So a little bit smaller positions, and the key is I don't want to end up having more than half my money in trades right now. I just don't want to have that risk exposure, and I also want to spread out into some different areas. I'm going to get into some another consumer staples. Oh no. I'm getting into coal. Actually, I'm getting in the same area with energy, but I do want to get that coal trade. That is a little bit of diversified within energy. I want to get into some basic materials trades. There's 2 of those I want to add. And so just kind of diversify that risk a little bit into some different sectors, without having too much exposure though. So that's kind of my thought process there. And again, I'm playing around with some things I normally don't do in regular bull markets. So just keep that in mind. This is not going to be the way we use the software all the time, but we're in, if you want to be long the market and you're in a bear market where everything's trending down, you have to trade it a little bit different, or you sit out. And like I said, I keep saying, if we sit out, I don't have a class to do each week, and we're not doing anything. But you're here to get some ideas and to do something, and so we're gonna do some things that are a little unconventional during this period of time to see if we can make a little bit of money while we're waiting for the market to bottom. All right, let's take a look at Another one in oil though that caught my eye because I like this company is, but it's just a general oil company, Devon Energy, DVN, 98 strength rank right down here, and it looks like this big inverse head and shoulders pattern. Big up day today, buy signal today. Now you could, if you wanted to, wait for a little bit more confirmation to break out. You could also, you could trade this with a really tight stop. You could say, okay, I think it's going to break out here, go higher. I'm going to put a stop down here so I don't lose very much if it comes back down. Or you could put a stop down below here to give it a wider space. Most of my oil trades I have down below these lows here. But those are just a couple ideas. This would be one where you're not putting too much risk. And if it goes up from there, then great. You didn't risk very much, and you can participate in the full reward of it rallying back up. So there's pros and cons to different approaches. I just thought I'd point that out as a different way to manage it. All right, let's look at basic materials. And I saw a lot of similar patterns with these. There's a whole bunch of these that look really good. The one I'm going to get into is Tech Resources right here, TECK, 92 strength rank, down a little bit, but this sector has a little bit lower strength ranks in general. So, but I like it had this big drop down here, and then you've got this impulsive move up. This looks like a big ABC correction. And then on a smaller scale, this is very similar to what we were looking at with which one was it we were looking at? I can't remember. One of the ones we were just looking at. Well, you have an impulsive up, this little sideways corrective move. Start to break out right here. I'll probably put the stop down below here. But I like that one. But there's a lot of these inverse head and shoulders patterns that are showing up on these stocks. Let's show you another one here. CF. I'm going to add this one as well. 98 strength rank. That has a higher strength rank. This is a fertilizer company. So again, agricultural products, fertilizer, that even like tractor equipment, stuff like that. Those should do pretty well. With again that you have a food shortage or at least a wheat shortage in the world right now. So, but you have kind of this. You have this kind of left shoulder, head, right shoulder, neckline right here. You could wait for it to break above the neckline. On a smaller scale, you could say you got impulsive up and then corrective. Whenever you see stock moving up, you want to pay attention, or whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's what's more likely to go after it starts moving sideways. What I also like about this type of a inverse head and shoulders pattern is that it should work its way back up to this high right here. That's a previous high. That's a target area. Also, the way you get a target area on a head and shoulders pattern is you can take the distance from the neckline to the top, in this case, the bottom of the head. You take that distance and project it from the top of the neckline right there. And that puts you right about in that same spot. So the pattern is telling you it should get up to here. The previous high right here is telling you it should get up to here. The reward to risk, although I'm going to probably put my stop down here. I hope that I can move it up there and reduce the risk, but that's a pretty good reward for the risk I'm taking. And I don't know where did I put my stop on that? Yeah, I'm going to put it down below here. I was going to give it some room just because I've been getting bounced out of some of these. And I'm not too worried about the risk here, because remember what we're doing with the risk is when the market is dropping, we're jumping into these inverse ETFs, and that's what's been saving us on some of these long positions that have pulled back on some of these sell-offs. So anyway, I like that one. Another one here is this RYI, Ryerson Holdings Company, 96 strength rank. Again, you're seeing a very similar type pattern. Here's kind of the left shoulder, the head, the right shoulder, neckline, inverse head and shoulders pattern. You have this little bowl right here, and then this is kind of another bowl. It's putting in a higher low. This is just a really bullish looking pattern. Let's go to a little bit longer term chart. You can see. So yeah, and look at this longer term inverse head and shoulders pattern right here. You have a little head and shoulders pattern right here. You have a larger head and shoulders pattern right here, higher low right here, even high. Yeah, well, you went to a little bit higher high right here. That's a very bullish pattern. We were in basic materials. There was a couple more still. UAN right here. UAN 97 strength rank. Again, you're seeing the same thing. I just started to see this pattern all over, and I'm like, wow, this whole sector is looking the same. And then I'll do one last one. Actually two. I'll do two more. Because one of these, it doesn't have a high enough strength rank, but I love the pattern. This Steel Dynamics, this does have a high strength rank, 95 strength rank, STLD. Again, it's a very similar pattern here. The one that had a little bit, it's still an 80 strength rank, but I really liked just the bottom. It looks like a nice, great bottoming formation. This Vale, V-A-L-E. And look at this. Look at this chart. So you have this big ABC pullback right here after this run up. And then you see a lower low right here. And then now you're seeing higher low, at a range right in here. Now you've got a higher high and it's pulled back. It has a bullish candle right here. See if that's another higher low. It looks like it's starting to move up the right side of the bowl. I like to find some of these that look like they're just starting to move up the right side of the bowl. Doesn't mean they always do, but you know, you get the nice big pullback and it has the ABC look to it. It has a basing pattern that then starts to give you higher highs, higher lows. I mean, it's fundamental chart analysis, but this is an 82 strength rank, so it's a little bit lower strength rank. And it could be one you just watch. You say, okay, well, I don't want to add anything right now, but if it breaks to another higher high and goes back to a buy signal or whatever, maybe I could add it or something like that. But I love that chart. I thought I'd point it out. And then a couple construction stocks. Okay. I am past the top of the hour. My new goal is 10 minutes, 5 more minutes, and then get done and then get out of here. So hopefully I'm getting better. Let's see if I can stick to that. All right, construction. FLR at the top of the list, 98 strength rank. Again, very kind of similar type formation here. Bullish engulfing pattern right here. I like that little pattern. And then one more under construction was this FIX, Comfort Systems USA, 95 strength rank. Now, I'd like to see a little bit of confirmation on this because I'd like to see this go up to put in a higher low right there, clearly put in a higher low. You need another day or two to do that. But I like this whole corrective pattern after this big run up right there. Now, it could be stuck in the sideways range. It could rally, but then be stuck in the sideways range for 2 more months. So maybe that isn't the greatest one to jump into, but that pattern was looking a little bit more bullish. All right, real quickly here. Oh, I did have consumer staples, so let me do 2 in consumer staples. General Mills, I talked about possibly I didn't want to get back into this, but I said you could get back into this. I got stopped out on this drop right here, and then it went right back up. But it kept a higher low right there. Nice little move today. This one should be fine. That's one that's an idea there in consumer staples. And then this SEED, SEED, 92 strength rank. Again, we're talking about the same pattern, an inverse head and shoulders pattern. Looks like it's moving up the right side of the bowl. Although I don't know if I want to chase that big of a move. That's one thing I was going to point out. I don't know if I want to chase that big of a move. But all right, so the one I'm going to get into is Tech, TECK. Oh, I think I wanted to show you a longer term chart on this. I don't know if I did. But you can see, again, this big pullback right here, impulsive move up, A, B, C, and then a smaller impulsive move up, and then the sideways move. Oh, yeah, this is the one that was looking very similar to was it CEIX? No, I can't remember the other one that I was looking at. That's all right. All right, so I'm gonna put my stop down below that recent low right here, which is about 28. And so let's go ahead and add this. Stop at 28. And all right, so what I'm trying to do here is get this transaction price here to about 5,000 instead of the 7 to 10 usually I've been doing. I'm going to keep that amount a little bit smaller. So we could do 150. Yeah, there we go. 150 shares. Very small risk too, which is good. Let's go ahead and purchase that. The other one I was going to get into was CEIX, the coal stock. I'm going to put my stop down below this low down here at about 57.50. $7.50. Yeah, 100 shares would be too much. About 40. No, that's too low. 50, 60. 75. There we go. 75 shares. Again, half a percent risk, which is a little more than 0.5% risk, which is good. And then one last one was CS. And I'm going to put the stop down below here. And all I do when I look at that is I'll put my mouse on that down day, and then I look over here at what the low of the day was, and all I try to do is just get it below that price. So the low that day was $90.25, so my stop will be right at 90. I don't mind using round numbers. Some of you don't like to use round numbers for your stops, and that's fine. I just don't have a, I don't use a real strict. It is a strict stop loss in that I do stop out of trades, but I don't put in actual stop loss orders or, sometimes I'll wait for the close to see if it closes below my stop loss price. I've done that before. So we're going to put this at 90. 100 shares is too much. 40 shares, 45 shares, 50 shares. We'll do 50 shares. That's a little over 5,000. All right. Yeah, so I still don't have I still have most of my capital in cash. And you can see I've got these little smaller positions here. Let's see if that can help us a little bit if we do rally a little bit more. All right, real quickly, we're at the highs of the day, okay? So we'll see how that looks at the close. What you're looking for is do we fade into the close? We close at the highs of the day, that'll be good. We should open higher tomorrow. That'd be a good sign that we could open higher tomorrow. All right, thanks everyone. Have a great week. We'll see you next Tuesday for the market update. Bye now.